Hey, everyone. Okay. So last week, the um, narrative became consistent with the um, thing that I've been suggesting for about 7 weeks now, that we're heading into a slowdown, and bonds rallied a lot and stocks sold off. Um, And so, of course, the question becomes whether it's a narrative or a fact. And I think the most important takeaway for me is that we will never, well, we will know eventually, but we won't know until well after the fact in terms of the data turning south. Um, it's not surprising that it takes the NBER 6 months after a recession has occurred for them to call it a recession because jobs data is the most lagging data that one can find regarding GDP. Um, and all of the data that we're going to get released, except survey data, is lagging for growth. GDP obviously is lagging. We don't get that for a month. The first time we get it is a month after the quarter has already ended, and so there'll be people that will say that this was just a growth scare and that is silly and the economy is going to do just fine. Um, I think that is certainly market's going to fluctuate. Don't get me wrong, and we'll get to that in a moment. But I think that's just wrong. I am very confident that the combination of a Fed that is staying on pause until the data starts to turn because they've been burned too many times, and a term premium in bonds that still, even to this day, after this current rally, is still in the mid 50s. And equity are down and equity vols are up, which indicates term premium expansion. Credit spreads are up modestly. Um, so term premiums are tight relative to where they have been. And so that combination of things, ignoring the policy uh, implications, are all weak, suggest fall in growth. By the way, inflation it's going to be sticky if we don't if growth doesn't fall, but I'm past that. I think it's reasonable to expect inflation to achieve target if I'm right on the growth slowdown. And so we're going to get inflation data. That's a little speedier in terms of, it looks back a month, but it's a little speedier. Um, and I expect that to be warmer than we'd want it, but still not like accelerating in the wrong direction. So, I think the inflation data the week after next is going to be relatively boring. Um, so we've got this situation where data is going to encourage people who think it's a temporary it's just a scare and not an actual slowdown, and markets who will discount whatever they'll discount, which will either be an additional slowing or less slowing than is currently priced. Um, and what else did I want to say? And then we get to policy. And so this week we're going to have on Tuesday, I think it is, the 4th, the Mexican, China, and Canadian tariffs announcements. I expect Canada to be full Monty, 25% with a carve out for oil. And I expect immediate um, retaliatory tariffs. Frankly, potash is the thing that they should go after. I don't know if they will, but creating export tariffs for potash seems to be the way to screw the American farmer, because that's the key element of fertilizer. And planting season is on our way, is coming soon. So there's a interesting dynamic for what Canada will do. I say it's going to go full Monty because they've shown absolutely no interest in negotiating with the Trump administration. Mexico, on the other hand, has proposed ideas like front-end tariffs on China so that they can't be used as a way for China to get its goods into the United States. I suspect there's going to be some give on that, and you'll get some tariffs, but less tariffs than they would if they hadn't begun negotiating. On the other hand, it is the absolute problem with immigration, and so we might see the immigration bit drive higher tariffs than expected. China, they probably increased tariffs because why the hell not? So I think you're going to get negative tariff news. You might not. Maybe he completely withdraws tariffs. It's possible. I don't know. I'm going to take him at his word for now and think that tariffs are coming. When they get taken off, we'll see. But I do believe that and Besant was on Meet the Press, I think, today talking about the agenda and was very clear that Trump is going for a restructuring of global trade. Then we get to the reconciliation bill. I don't know if that passes this week through the Senate and in conference, and whether it gets implemented. It seems to be general and close, but we'll see if that gets done. The takeaway there is $1.5 trillion to $2 trillion of expenditure cuts over the next 10 years. Just annualizing that to 150 to 200 billion and adding on some number, pick it, of 150 to 200 billion of Doge cuts, which we don't know if they're going to be able to be implemented because the Congress is going to care about those. You're talking about, I think Bob said this, you're talking about the biggest tightening of fiscal conditions in our lifetime. 300 to 400 billion of expenditure cuts is a meaningful fiscal tightening, and would require to get anywhere close to targeted GDP of 3.9% nominal, which is what the SIBO has, or Besant's 5% nominal, which is his 3% plus his 2% of presumably inflation target, is going to be a real trick. You're talking about 7% to 8% growth needed for the private sector, which never really grows that long for that much, and is currently only growing at 4%. Now, deregulation is going to help, but front end, this thing is deficit reducing, possibly, depending on how they spend it on taxes, which is more about financing than expenditure cuts, which are coming in a meaningful way and are going to create a slowdown. How deep was that slowdown? I think it's deep, but for now, I'm happy that we just get 100 basis points of slowdown, as I'm predicting for Q3 to Q2, and that will be a slowdown that will both allow the Fed to cut more than is currently in their SEP. I expect the SEP in 2 weeks, 3 weeks, to come down, and so more cuts priced. And terminal rate in this environment is unlikely to go up, so you could get some of the longer dated SOFR continuing to rally. The shorter dated stuff is pretty much right on top of SEP right now, and so I'll come back to that. But the move, so let's go now. So I think it's coming. We're going to get data that's going to be ISMs. We're going to get data that's going to be durable goods orders, and we're going to get a couple of employments data, not JOLTS, but we're going to get NFP and ADP, which is trash, but is private sector. And we're going to have to pay attention to private sector because that's where any strength is going to come from. Because we know government sector is going down. more unemployment from the government sector. That's a fact. When it'll show up, that's irrelevant. When you look out, that's a drag on the economy. Um, and great, if we can cut the deficit, that's great. I don't want to get into politics about whether it's good or not. I just want to say growth is coming down. And so now let's look at what happened in markets. Until at 3:15 on Friday, I believe it was 3:15 on Friday, the stock market was, the S&P was at its year low, well below its opening range for the year and at a new absolute low. And then we rallied 100 points, more than 100 points, 120 points. And those 120 points came for no reason, no reason at all, except technical month end options and ETF rebalancing flows. And that's all it was. All it was. It wasn't anything else. It wasn't the theater in the Oval Office. It was technical. But where were we? Where we're at the lows. At this, by the way, I have an offer on for puts. I wanted to try to lighten up. Those are now completely off the fucking table. No way am I going to be selling puts. If anything, I'll buy the bottom end of my short puts if we rally tomorrow. Because I am pounding the table that the economy is going to slow and the stock market is in for far more trouble than we've seen this year. It's going lower in March. We're going to make new lows in March. Now, what about the bond market? The bond market, the SOFR curve closed at its peak. So it sees a slowdown. The 10-year yield closed at its lows. It sees a slowdown. No, the rally in equities didn't do a damn thing to the bond market. It didn't do anything to most assets. It didn't do anything to crypto assets. We'll get to what happened today. No mark oil rallied a little bit, but it really didn't do anything. And the commodities complex in general did not rally on the equity rip. So every other market is screaming slowdown and has not retraced at all. Now, does that mean it's gonna go farther? Well, it's moved a lot. We're up 52 basis points from the February 12th high in yield for SOFR um, that were long, and it's currently pricing in roughly 75 basis points of cuts. Now, if there is a slowdown, there are going to be more cuts. If there is not a slowdown, there are going to be that many cuts. If there is a stable, high growth, sticky inflation environment, those cuts aren't going to be realized. So I'd like to stay long these things. My view is strong, but unlike equities, it's made the move on the, um, in fact, it's made what I would consider a bigger move than what a growth scare would indicate. It's made a move that looks like growth actually falling, or projections of growth actually falling. And positioning is not in shape. There still is more weakness in equities and neutral to slightly stronger bonds given positioning. So I could just stay in my short equities and long 2-year notes, but I'd rather bet more heavily on equities at this stage than bonds. So I am looking for a point to lighten up into a sell-off in the 2-year notes. Um, and then if they come back in, no problem. I'll buy them back. If they rally to, I don't know, 96 and three quarters, equities are fucked. Equities have fallen at least 5% to get that rally, and I'll do just fine. So that's what I'm focused on in terms of lightening up there. In terms of the long end, again, the long end is going to rally if growth comes in the way I expect it. It's not going to rally as much as twos. The Fed's going to act if this slowdown happens, um, but it's going to rally. So the question is it worth a short? Probably not, to be honest. It's probably worth buying the dip, but I did sell a little bit of out of the money calls on Friday just for a slight hedge to my SOFR in case for some reason this growth slowdown comes in, and then I'll cover those and stay long the SOFR. Um, but I'm not committed to a big bond short right here. Term premium is 55-ish basis points. Real yields are low-ish, not absolutely low. They're not worth buying. And we've come a long way. Inflation expectations have also dropped somewhat, and the data is likely to be weaker than versus stronger. And yet, QT 2.0 continues to be impacting mostly through the transition of term premium from bonds into equities. And so an equity short is a better way of playing a term premium expansion than a bond short where you're fading the growth slowdown and the inflation decline. Um, so I'm not in love with getting short bonds, but at the same time, they have come a long way. And so tactically, selling calls is not the worst thing in the world. Um, I sold relatively short dated calls, 21-day calls. So I guess what I'm saying is I've had this view that the term premium expansion, that the fiscal tightening, that the Fed being on pause is going to cause a slowdown, and we're going to get a slowdown, and that means sell rallies and equities and get short. Um, so now let's talk about what happened this weekend. You had the president mention Ethereum, Bitcoin, Solana, Cardano, and Ripple, I guess, as going into as, sorry, that the working group should be focusing on those currencies to move forward with the strategic crypto reserve. And those things rallied from Bitcoin rallied 10%, and Cardano, I think, was up as high as 65%. And so are animal spirits for equities going to cause equities to open higher? I don't know. I guess probably, right? That's what happens, but I'm a seller. I'm a seller. If it hadn't happened, I'm an aggressive seller because of the ramp on Friday that is going to have a retracement because it was so sudden and got people so off sides that no one could front run it. So that's going to retrace. So that's a headwind, even if crypto gets it causes some asset excitement. I don't think it will. I hope it won't, but if it does, that's when I'm going to act to buy the bottom end of my put spreads. Um, as to crypto, I have no fucking idea. It looks like a pump and dump to me, but who the fuck knows? I'm going to be a buyer when it looks like it has finally tested back the lows that we saw and stabbed lower. I'll be a buyer, but for right now, I have no axe. In the mid 90s, I have no axe. Um, Germany is going to issue a shitload of bonds if they break their debts, what they call their debt break, which is like a debt ceiling. And already swap spreads are expanding are going too negative in Europe and more negative than they have been. The same thing applies to swap spreads in the United States after initial bounce associated with the SLR reform, which is doesn't really help swap spreads much. those are retracing. So bonds are around in terms of liquidity, sucking things up. But you've got the same liquidity nonsense with the TGA spend down. It fell $300 billion in three about a week. Almost all of that went into RRP, and it happened on February 28th. Now, all those things to me, and I haven't dug in because it's such nonsense, but John Comiskey probably has. I would bet big money that the RRP will fall and the TJA will rise as next week's auctions of T-bills happen. They haven't all been announced, but I think the number is something like $300 billion of aggregate T-bills being issued next week, and that's going to fill the TGA back up. And so some of the liquidity nonsense that you saw from Zero Hedge and others is going to be reversed. Now, do I think that's causing us cause? Do I think that had anything whatsoever to do with the 315 rally? No, but I told you that, and I told you what my outlook is. But at the same time, if you got a TGA number and you got that sort of sentiment going and you got the crypto thing going, you could get a rally on them opening tonight and into tomorrow. And that needs to be sold. Okay, that's my rant. I feel I don't do this very often, and I just want you to know that I feel very strongly about the equity positions I have right now and am going to remain quite short equities. Bonds, they're reaching a no man's zone where it's more of a coin flip than a strong view. Do I think they're gonna the short end is going to continue to rally? Yes, I do. Particularly if equities fall, because there'll be Jeremy Siegel will be on and everybody will be expecting to cut. Um, and so, but nonetheless, it's been a great position. So I don't want to leave money on the table. So that's where I'm at. That's where I'm at on that. Okay, as Jimmy comes on, I'm going to try to answer some questions. Do you think SOFR and bonds have overshot? Probably. When you say 100 basis point slowdown by Q2, do you have more specifics? Does that mean by it's the nominal GDP in the second quarter, I suggest will be 3.5. I think it'll be split with 2% inflation and 1.5% real growth. Oh, let me come back to that too. Would you switch M6 into closer? No, actually, if anything, I'd go the other way. I like M6. The shorter stuff is already priced on top of the SEP. So I'm not sure you're going to get much satisfaction on additional steepening in the rallies in the front end, in what are called the whites. Um, my view has gotten more confident and has not changed. As it relates to vol, now that's an important issue. Puts are fucking expensive right now. So as you're thinking about um, adding puts, make sure you're focused on put spreads or you're just buying tails that are way out of the money. And consider selling call spreads as well, where you can get some vol back because vol is high. Yes, rallying means rate. No, rallying means it's always price. Um, Long end rallying means yields fall, rate prices rise. And as I said, it's rallied a lot. I'm not sure it's going to rally much further. I shorted some tactically. And yes, I am officially overnight offering my SOFR M6 position at 96.5 as a trade. Okay, Jimmy, what do you have in thought? What's your thoughts?
Hey Andy, how you doing? Uh, First of all, I'm happy that we're aligned because I my tweet earlier, I really viewed Friday as just a squeeze across the board on every metric that I measure and watch. Um, Vol was really getting very bubbly right before this happened. I mean, we were at our year lows, like you said. It was kind of the perfect storm, as I mentioned in my tweet, where we went from the Zelensky Trump meeting, um, where kind of the VIX curve started inverting, things really started breaking down, and then we went into that last hour, end of the month shenanigans that we've seen before. This is not anything new. We've seen liquidity issues end of month, and this was a perfect storm because really, Thursday set us up for the move that we saw late in the day because Thursdays was so steep and nasty on the way down, it left nothing for us to hang on to on the way back up. So, 100% with you. As much as vol did have a whiplash pattern and go from almost a severe panic to then having to deal with a 100 point rally in 45 minutes in the S&Ps. It never really broke any of the scary barriers. It's the VIX curve stayed flat. It's still nervous. We have and to make this quick before we run out of time, vol is still jacked. The curve is still flat. Spreads are compressed. Butterflies are compressed. We have 50 handles of air beneath us. We have very solid resistance above from all our swings from last week. So it's kind of like a hard ceiling above and air below. I feel like, yeah, we might, like you said, we might bump up and make a few people that held on to some shorts puke tonight, but the writing is on the wall. I think that we go back down and let's see what happens around the ORs and Friday's lows. If you're a bull and you want to defend and you want to carve out a low in this area, that's where you're going to defend. I don't think they can. I don't think that doesn't look like a low to me on the charts. It doesn't look like a low to me anywhere. And like you said in fixed income, yes, we're pressing up against like some resistance and that swing area from our August highs along the curve. Yes, but it's not the type of resistance. We're through the hard stuff. The hard stuff was 2 points ago. We're
Right.
through the hard resistance. Now we're kind of in that new, where if the stock market does take out Friday's lows, then yes, this presses on.
Higher. Absolutely.
It
Absolutely.
presses on.
One thing on
So
vol, Jimmy, I haven't run my delta for the VIX front contract versus spot. Um, we fell a point in
yeah,
in 120 points of upside. To me, that's vol didn't change at all. That at fixed strike vol stayed bid, if not even higher as we rallied. So
yeah,
I think that 18.9 level on VIX is, it's fucking high. Don't get me wrong. I'm not buying it as a VIX trade, but one of our readers, listeners did, asked where you would buy. And to me, if you got a 18 and a quarter sort of level crush on a short covering rally that also presses vol, maybe that's a
yeah.
good level. It's still rich to me. I still would rather.
It is. It's rich, but and you know what? I mean, vol was at 20 when we got hit with this 100 point rally. So
Yeah.
you had to expect it to react.
Oh,
That those
yeah.
are those are nuke levels. The only thing that keeps the feather going up from there is a strong wind. But you're absolutely right. I think that 18 quarter area is now pretty solid as long as we stay under like Friday, this
The opening,
resistance,
yeah, the
you know,
OR from
I
year end.
right, because you know what, the lows are very tentative. We haven't broken any upside major technical levels. I think you have to, I think 18 quarter is the floor.
Yeah. Yeah.
And you know what? This.
I'm not a buyer. I'd rather have the delta than the vol at that level, but that's
Mhm.
sort of where I see the same thing you do.
And the term structure, which I've always followed, that gives me kind of that like sixth sense of where vol is in the VIX is, the front spread is 19, the second spread's 12, the front butterfly is 7. These are all really super flat, super cheap. The VIX curve is not, there it's extremely nervous. It's one click away from snapping back into inversion and going full on ballistic DEFCON 5, so and the VIX curve, it usually leads bottoms. And that's the other thing that I noticed is that this move was more really reminded me of like that end of the month type of blindsided bullshit that just got out of control, that was a small fire that, ripped into a forest fire type of thing. That can happen in these situations, um, but usually when it's more of a bottom and a longer term thing where the market is like really churning and gonna, it's the VIX curve and those spreads that turn first. And those were caught completely flat-footed and blindsided on
Right.
Friday.
Right.
And that's why, I just I don't give much credence to the move at all.
Okay. So, anything else? Oil, gold, we covered the
Um,
gold short, or
Well, interesting. Like, all right, gold broke down below its trap door at 2,900. So I would be a seller of any pops up to 2,900, and I don't think it really has much viable support until 2,800. It kind of has a gap here. I know there's some pundits that are calling out levels in between. But I think now that it's like broken that trapdoor at 2,900, I think it has to go trade 2,800 and that support to before it finds a bottom. And I think the environment is right for it as well. Plus commodities, which were kind of strange last week. Wheat and corn started getting absolutely smoked
yeah,
midweek. I guess on like the growth scare. But they're two that reacted really violently towards the original Russian incursion into Ukraine and that original commodities pump.
right.
So when that meeting went dog shit, I figured, well, maybe they would, start pumping to, like everything would kind of jump up. They didn't. Crude did a little bit, but then kind of got sold off. So like commodities across the board I would say adhered more towards the growth scare than like the, oh
Yeah, that's
geez,
what I think too.
the war is coming to an end.
The only thing I would say for agricultural commodities, and this isn't my lane, but the agricultural commodities to me is also tariff related.
Okay,
Like,
absolutely. You're right.
right, the demand side, if they, retaliating by not buying our grains seems to be a standard play for China at least.
Yeah.
Um,
But
okay,
Crude's interesting, like, we came down to a pretty solid support at 68, kind of the bottom of a range. 66 is really like the crazy bottom. But it got cheap, and now we're, at 70, we're middle of the road right now. I would think we're closer to support than we are to resistance, especially
okay.
if things get sour with Ukraine and
And
with
how do the Mag 7 charts look like to you?
um I'm gonna pump out all of them tonight because
Okay.
I've been working on them this weekend because they have such a different complexion to them. Like Nvidia is well under its 200 day, but it's holding its trend line, so it's kind of like a mixed bag. Some of them, like Tesla, is at its 200 day at channel support at an area like that I would buy. It's almost 50% off its highs. It's controlled by an oligarch that,
Yeah.
overthrew the elections. I mean, how can you not like it here? That being said, stuff like Amazon has room. They have room down to 200 on their 200 day. But you know what? I
Microsoft,
guess the
Microsoft to me has been the worst actor. I mean, obviously
yeah,
Tesla, but Microsoft for the mainstream.
right. And you know what? Microsoft is atrocious, and it completely bombed out of its bottom range last week.
Okay, so why don't
Um,
you work on those?
okay.
Anything on Nikkei? I
Yes.
expect Nikkei to well, it'll be very interesting. Will Nikkei rip on the US rip? If it doesn't, it's acted like shit.
Yes. And okay, so Nikkei, you put me on the Nikkei last week, and I'm trying to find my chart here. Um,
Okay,
I
anyway,
can't.
look at
All
Nikkei
right.
because I still prefer that versus
I
just
did.
about
I
any
did
other
a.
equity market now.
I did a bunch of chart analysis on Nikkei. I'll put it out on the website as soon as we're done here, and I have thoughts on it. It kind of it almost looks like a Bitcoin chart where it kind of had a big topping pattern and it got below it. It has a lot of resistance above. It has crazy targets and crazy air pockets below.
Right. I mean,
But
we were 31,000
right,
in last August. That gap,
right,
well, it wasn't even a gap. It was just straight down and straight back up.
right. And you know
Okay,
what? That's almost also another if it
it's
prints there,
there.
it'll trade there. I mean, that's a big one. That's
So you're not
that
necessarily a buyer.
no, not here.
All
Fuck
right.
that. No way.
Okay. Okay.
Um,
Um, Currencies are going to be dictated by the news. You've got the ECB, they're going to cut. You've got this German news on them funding their bond market. That's a lot of euros that need to be sourced. So we'll pay attention on that. But again, right now on currencies, I'm sort of neutral.
Yeah, other than, the big move last week was like Dixie breaking that like down wedge and breaking its downtrend. And it's been kind of on the warpath since. It
Yeah.
has it has some really solid resistance around 107.75 here where it's run up to. So I don't see it doing much more damage from here. It probably needs some consolidation, but it's shown us like that recent move's over. Anyways, it's herky jerky, stronger dollar from here.
Uh, You might as well do Bitcoin and Ethereum when you have a chance. It's
Yep. You know what I
obviously
noticed
it's
about
obviously a shit show, but
right. I noticed about like the one thing that he really pumped stuff like XRP and Ethereum and stuff like that. Because that shit was really in Solana. That stuff was really, that was more in the dirt than
100%, yeah.
in Bitcoin. So he really threw those guys a bone. What I would love to know is if you ask Trump about like Cordona, like what is Cordona? Tell me your views on that. Like, can you imagine this man saying anything past Bitcoin. And even at Bitcoin, it's going to be like the Bitcoin is the greatest thing in the world. But these are all coming from this has got to be Howard, right?
Gotta
Like
be.
it's got to be Howard. And I think it's all fades. Like this is all bullshit. And
Sachs,
it's
yeah,
almost
that's
like
true. David Sachs too.
yeah, I feel like it's like trying. It's almost appeasing a child who like is angry that he can't pump something, and you're like, all right, you can't pump equities. No, we need, we want yields lower. If you need to pump something, go ahead. You can pump this, rattle that. But it's bullshit. this is ridiculous. I don't think there's any correlation to the economy. Um, I don't think it's any correlation to anything. And I think these guys will be the first ones to be puking and bailing if shit goes south in both the stock market and the economy. If we see like kind of a washout and a vol pump, I think the crypto boys are